Hello everyone, today I want to talk about a stock that I've been buying recently, and that is called FUTU Holdings. It's a Hong Kong based brokerage that services retail clients from Hong Kong and the Asia Pacific. It went up hard during the COVID boom but crashed in 2022 and it looks set to break out again. FUTU will be releasing earnings before market open on Thursday the 14th, and if it beats expectations I think it could gap up significantly. Stay till the end for my price targets. In this info-packed video, I'll give you 5 reasons why I bought FUTU. They are: 1. In a bull market, brokers do well. 2. In a high interest rate environment, brokers also do well. Number 3. FUTU is rapidly growing its revenues and earnings. 4. FUTU's valuation is attractive relative to its growth. And finally, Chinese equities may have bottomed. Before we begin, most of you are not subscribed yet, so please hit that like and subscribe button to get instant updates when I post videos. And also, I'm not a financial advisor, so please take my content with a grain of salt and seek professional financial advice if you need to. Alright, so it should come as no surprise that in a bull market, retail participation in the stock market rises significantly, and that means more trading, which means more commissions and margin income for the brokers. Not only are they trading more, but retail traders tend to use more margin as sentiment gets more bullish. This will increase the broker's margin interest income. This is a chart of the S&P 500 and Charles Schwab overlapped since the 1990s. As you can see, when the stock market rises, Charles Schwab does well too. Now, we are in a bull market, but FUTU, like Charles Schwab, hasn't really rallied all that much, and I think if FUTU delivers a good earnings report this week, I think the market will re-rate the stock much higher. Moving on to the next point. In a high interest rate environment, brokers make interest income on their clients' cash deposits. For example, if you look at FUTU's Q2 revenues from last year, their interest income more than doubled from the year previously, as revenues from commissions actually declined. Why is this? It's because central banks around the world started raising interest rates at around this quarter, which was the middle of 2022. A year later, interest rates were significantly higher, hence the huge increase in interest income for FUTU. Furthermore, FUTU sells money market funds and clients have been cramming into those too, increasing commissions for FUTU. In Singapore, their wealth management asset balance grew an astonishing 6-fold year over year as clients turned to money market funds. This is probably off a small base, but still it's an impressive number. Moving on. Now, FUTU is a fintech growth stock that is rapidly growing its earnings and revenues. Let's take a look. This is a chart showing FUTU's quarterly revenues. There is a clear trend up, and the past 6 quarters have been significant beats over estimates. If FUTU can beat revenue estimates significantly this week, the market should re-rate the stock accordingly. Market consensus is around 337 million in revenue for the quarter. When it comes to earnings, the EPS consensus is lower than the last quarter at around 87 cents, possibly due to increased costs from market expansion into Japan. But as you can see, the overall trend is for the EPS to increase. So FUTU has growing revenues and growing earnings. But what about the valuation? Well, FUTU is trading on a forward PE of just over 14, which is actually less than that of Charles Schwab, whose forward PE is over 15. Furthermore, FUTU has higher ROE than Schwab and also higher operating margin. Combined with the fact that FUTU's revenues and earnings are growing much faster than that of Charles Schwab, I think it's safe to say that FUTU's valuation is much more attractive. Another reason why I bought FUTU is because I think Chinese equities have bottomed out. Alibaba is showing signs of life, and there are stocks like Tencent Music Entertainment breaking out to 52-week highs currently. This means that investor appetite for quality ADRs like FUTU may rise in the near term. Furthermore, although FUTU's clients mostly trade US stocks, a significant amount of trading volume takes place within Hong Kong. For example, in the third quarter of 2023, 75% of the trading volume was in US stocks, and the rest, 25%, was in Hong Kong stocks. It's probably more in favor of US stocks now, considering how much they have rallied, but the local market volume will still be significant. So in summary, FUTU is a rapidly growing stock with an attractive valuation in a bull market. Now let's move on to technical analysis. As you can see, FUTU got crushed in 2022 like many other growth stocks, but it has been basing for the past 2 years. It looks like a really long wedge is forming on the weekly chart with higher lows and lower highs. The volume has been reducing recently, and I just get the feeling that there's going to be a huge price move pretty soon. If FUTU releases good earnings this week, I expect the price to pierce the upper channel of this wedge and break out to $70 in a single day. My average price is just over $60 and my stop loss is around 40. If the earnings report is bad and the stock gaps down though, I'll probably sell and take the loss. If it's good, I'm holding on and perhaps even buy more depending on how much it gaps up. So that's it from me guys. Thanks for watching. What do you think of FUTU stock? Is it a buy, hold or sell for you? Let me know in the comments below and please click like and subscribe for more content. Thanks. See you next time.